So if you haven't heard by now, the TSP is planning on offering a mutual fund window this summer to federal employees who participate in the TSP. So this begs the question, what does it all mean and why should you care? How about we dive in? For too long, the TSP has always offered only passively managed index funds, which have been extremely limited in its investment offerings to federal employees. The 5 cornerstone funds of the TSP, G, F, S, C, and I funds, along with the life cycle funds, which are an allocation of the 5 main cornerstone funds, were the only funds TSP investors had to choose from when it came to building their portfolio for retirement. The good news is these limited options made it very easy to invest since it's 5 funds to choose from. Also, as you may already know, these funds use an index fund approach to investing, whereas they have very low internal fund cost to the TSP investor. Personally, from an accumulation perspective, I think this is a huge benefit because when you are trying to grow your money over the long haul, the last thing you need are high internal fund fees eating away at your gains every year. And for this reason, and in my opinion, the TSP is one of the best retirement growth vehicles available. Now, that being said, a limited fund choice isn't always a good thing. As a Fed-focused retirement planning firm, we often hear federal employees express their dissatisfaction with the lack of investment options available in the TSP. But at the end of the day, it is what it is, right? Well, not anymore. According to the TSP, after many years in the works, they will be offering TSP account holders access to approximately 5,000 mutual fund investments. While the TSP finalizes the fine points, you should know that mutual fund window will not eliminate 5 cornerstone funds you have to choose from. They will remain intact and you will continue to be able to invest your money in GF, SC, and I funds. However, this mutual fund window, as I see it, is actually going to provide a huge opportunity to federal employees to gain access to a much wider selection of funds. As far as I'm concerned, this is certainly a move in the right direction for the TSP, but there's always a catch, and I'm going to get to that in a moment. First, let's drill down a little more on the positive aspects of this breaking news. Now, and for the first time since the TSP launched, federal employees can diversify their portfolios in a way that they have never been able to do so before. So according to the Federal Retirement Thrift Investment Board, the funds will also include the opportunity for you to invest in environmental, social, and governance funds, which are commonly referred to as ESGs. This is actually a growing segment of the market, and you'll soon have access to funds which invest in these types of companies. Once the mutual fund window opens, I think it will turn out to be an excellent way for federal employees to truly diversify their TSP even more than they've ever imagined. The mutual fund window should provide federal employees the option to take a portion of their TSP money and invest in a variety of new choices to help customize their retirement portfolios. Unfortunately, many details aren't available yet, but it's my expectation that this new lineup will forever change the face of the TSP. All right, so let's take a moment and tackle some of the potential drawbacks of the mutual fund window. First, the TSP participant would have to take on the task of actually sifting through 5,000 mutual funds to choose what they want to invest their money in. And this alone could probably turn out to be a full-time job, which I'm pretty sure you already have a full-time job. Okay, so let's talk about fees. The Federal Retirement Thrift Investment Board is proposing to collect an annual fee of $55 for mutual fund users who opt in and decide to participate in the mutual fund options, and will also impose a $95 annual maintenance fee. On top of that, there's likely to be a per trade fee of approximately $28. Now, this per trade fee is a fee that's typically charged by a mutual fund when you purchase their fund. Something to keep in mind, this fee may be imposed every time you purchase a new mutual fund, and this fee will likely vary between fund families. So please, make sure you do your due diligence and understand these fees so you aren't caught off guard. TSP investors who continue to use just the existing 5 funds will not be subject to any additional fees. And additionally, and certainly something that you should be aware of, the TSP is planning on limiting how much money the TSP account holder can transfer between TSP core funds and the new mutual funds offered through the window. Based on some early information, federal employees will be required to have a minimum TSP balance of $40,000 and make a minimum investment of at least $10,000 to be eligible to invest in the mutual fund window. To top it all off, it looks like there will be a limit of only 25% of all TSP funds allowed to be invested in these mutual funds. One last important note, when a federal employee transfers to or from mutual funds, you should know it's going to be treated as an inter-fund transfer, which also may affect your monthly limit. So there you have it. While I can certainly see some value in having more investment options within your TSP in an attempt to diversify your portfolio and spread out your investment risk, there's certainly a catch when it comes to taking advantage of the TSP mutual fund window. If I were you, and as this mutual fund window finally opens up to TSP participants, I think it might make sense to dig in a bit and try to get educated on how it works and what's involved. By getting this information, you'll be that much closer to determining whether it's a good fit for you or not. If you think this video can help other federal employees you know, please feel free to share it. And I thank you for your time, and I hope you have a great day.